Return of income tax assessment procedure. This is one of the important topic in the taxation in the MCOM course. Definitely every person need to understand before filing the income tax what is the return of income assessment procedures we need to understand. So this is one of the important topic, and what are the types of return of income, how the assessment of procedure, all these things we can understand in this session. Introduction to income tax. Income tax is a direct tax levied on individuals and entities based on their incomes. We have majorly 5 heads of income which many students have studied in BCom: income from salary, income from house property, income from business and profession, income from capital gain, income from other sources. This is 5 heads of income. Not only that, we have types of persons: individual, HUF, firms, companies, AOP and other persons. So 5 heads of income plus these are all the assessees. How do they make the income tax return? We are going to understand. So not only this, we need to understand in the introduction administered by the Income Tax Department under the Income Tax Act 1961. So in this, what are the procedures, what are the practices, and all these theoretical aspects we can understand with the compliance involves filing of return, paying advance taxes and following assessment procedures we need to understand. Why income tax returns? Because now it is all e-filing, that is the reason. Why e-filing income tax return is required? Because of development of technology, time saving and user friendly, every assessee can go for online return submission. A very simple, whenever the assessee is having 2.5 lakhs above, he has to be submitted income tax return, as we know. So we are all depending a recent March completed. Generally it is 23-24 March is completed, then that as financial year is completed. 31st March 2024 is available for making financial accounting and also making calculation of income tax. Based on that, income levels, exemptive levels we need to understand. So according to 2023-24, if your income is exceeding 2.5 lakhs, that is 2,50,000, then you have to submit your income tax return. This is a minimum idea. But if you have 5 lakhs income, also need to be submitted, otherwise no need. Why 2.5 and 5 lakhs? 2.5 lakhs to 5 lakhs, there is a exemption under section 87. The assessee, when we have below 5 lakhs income, they will be having exemption under section 87. The significantly large number of returns are e-filed, and gradually the income tax department is hoping to bring returns online. In any of the following cases, the income tax department has made it is mandatory to make e-filing returns. We can understand return of filing, e-filing both. You want to claim an income tax refund, you have to submit your income tax file. Your taxable income more than 5 lakhs, generally you have to file the income tax return. If it is 5 lakhs above, definitely we need to calculate of any individual any HUF, any partners, any companies, any firms need to calculate income tax, and we have to submit income tax return to the income tax department. This is the monetary obligation to every assessee. Assessee may be the person may be the categorization of the person, as we have already mentioned, individual, HUF, firms, companies and other persons. For this, we have types of return which prescribed by the income tax department: ITR 1, ITR 2, ITR 3, ITR 4, ITR 6, 7, like that. So, these are all individual ITRs specified for filing one particular income and one particular assessee. So, that we have to understand which ITR. ITR means income tax return, which ITR is belongs to individual when individual is having types of income. Like that, when HUF, firms, companies is having income, then what type of income tax return ITR should be filed, we need to understand. So, this is not much important, because every time there is a change of ITRs, there is a change of forms. But we should understand mainly, so which return is compulsory to file by the individual, filed by the HUF, filed by the other persons according to their types of incomes. That is more important theoretical aspect which you need to be understand. And which form is relating to this particular situation, that you can update every time from the income tax websites, materials, other books, other sources. Not only that, the paper return can also be filed those who are becoming 80 years of old, senior citizens, and also some individuals who are under the HUF whose income does not exceeding 5 lakhs rupees and who are not claimed any refund in the terms of income. So, this is also one of the exemption for making manual filing. Let us go into the next, need of income tax return. So, your gross total income, if it is before allowing any deduction under section 80C to 80U and exceeding 2.5 lakhs, as we have mentioned, according to the financial year 2022-23, because presently it is available, and then 23-24 assessment year income tax. Once financial year is over, the tax calculation is possible. So, that is assessment year. So, in that assessment year, we need to be calculated income tax based on the citizens, based on the assessees, senior citizen and super seniors and other citizens, 2.5 lakhs, 3 lakhs, 5 lakhs, based on that particular year how the assessment is made. So, that financial year, whatever the information is given by the finance department, budget of that particular year, we should follow the slabs and everything. And if you are a company or a firm or maybe some other person, then you have to be make the financial year based on the your assessment, and you have to file the income tax return. And you want to claim any income tax refund also, you have to submit the income tax returns. And you wanted to carry forward any losses, or if you want to make the income distributed, or any income for different years if you want to carry forward, or losses if you want to carry forward, definitely if you doesn't have income also, you need to be file the income tax return because of getting of benefits for carry forwarding the losses. So, most probably many assessees, they are all making these type of carry forward losses for making return of filing. That is also important. Then you have exempted long term capital gains, and sometimes sale of equity funds, shares, and sometimes sale of unity, and sometimes if you are making sale of units and some other mutual funds, any investment or any transaction if you are doing, then by the time for making all these regulations, you have to make the tax returns, income tax returns. Although sometimes you doesn't have the minimum income also, for getting all these benefits, you have to file the income tax return. That is the main need of income tax returns. We will be having some more points in the need of income tax returns, not only investment, not only limits, not only other purpose, it is also some mandatory. If you are residential status and individuals and who are not assessees, sometimes who are suddenly came to India and they are earning some income, also they should be calculated. For example, foreign shipping companies, foreigners, if they are coming to India, they are earning some income, definitely they have to file the income tax return before leaving from India, because whatever income they have generated, they have to calculate income tax and they have to pay taxes. That is one of the most important issue for the foreign income. If you are a resident and you are making sometimes foreign income and foreign procedures, so sometimes if you are living from India, you have to get it your passport, visa and everything. When you are clearing income tax returns and when you are getting assessment order, only you are eligible to get the visa and other things. So that is the reason income tax return also is compulsory. Once you are clear everything, your income details in India, you are free for flying. That is one option. And if you are required file of income tax return when you are in receipt of income derived from the property, maybe it is assets, maybe sometimes in capital gains, sometimes maybe in the buildings, real estates, maybe sometimes gold and other investments. That also showing your income levels and showing for exemption and showing your all other source of income, should be filing the income tax return. So that your declaration is very important, your clarification of income is very important to make all these transactions. If you are a foreign company and taking certain business and some situationally they need to come and they need to perform some business, some professional work in India, also need to be file the income tax return. Sometimes it's depending on the situation. A proof of return filing may be also be required of the time of applying the joining the visa, as we have already mentioned. So once you are cleared in India all the income levels, then you are free to go for flying anywhere. What are the returns of income? How many types of return of income? How we can do that? And how best we can minimize the tax, and how best you are making your assessment also. Assessment will have a next topic. Before that, if you do the return of income properly, then definitely your assessment, your profession, your income, your intellectuality, your sincerity, everything will be counted for making your income tax returns. And in this you can see the definition of return of income is a document that empower the filing of declaration of income. So sometimes when you are declaring your income, there is a one fixed format which is given by the income tax department. You should be mention all the particulars of your income, so that is one of the important document which you are undertaking. You are signing that document and you are filing to the income tax department. That is one important declaration. Then if importance of making some problems, some income tax problems, so sometimes we are facing with so many other unwanted incomes, unexpected incomes also, if you declare the income tax return is best. Let us see what are the types of income tax returns, ITRs. We have ITR 1. ITR 1 generally the individual assessee, general person, not HUF, not firm, not any other person. Individual, when he is having salary income generally, or one source of income out of 5 heads what we have already mentioned: salary, house property, capital gain, business, profession, other source, all these things. If you have only one source of income and only one house property, then the person who are filing income tax return can be utilized ITR 1. This is the earlier it is called Saral form. The individual, when he is sending the particulars of his own, he has to fill up the ITR 1. Then ITR 2 for the individual and HUF. The family, Hindu undivided family, can also file the ITR 2 when they are having not only one or two incomes. He is having in the house property there are 2 houses income, or in the some business he may be having 2 or 3 businesses, then he has to use ITR 2. So this is also sometimes based on the finance budget. ITR 1 purview, ITR 2 scope, all these things will be changed, but we need to understand exactly what are the requirements of ITR 1, 2, 3, 4, all these things. Generally, ITR 3 generally they are using for individuals and HUFs with business and professional income. If they are having, sometimes individual can constitute as a form for the practicing of profession, and also business can also file for the ITR 3. Then ITR 3 you have to understand, because ITR 1 it was given only one source of income, ITR 2 we have 2 sources, 3 sources of income. ITR 3 we are also coming not only salary and house property, it is also comes from business income. So that is the reason one by one, step by step, ITRs are very much required for filing of income tax return. ITR 4 is used for the business concern when they are using for the different schemes of business for filing of income tax return under ITR 4. And ITR 5, the partnership form, and we have partnership forms 2 categories, limited liability partnership LLP and unlimited liability partnership ULP. So these type of forms generally they are filing the income tax return of ITR 5. So this can be given more options while submitting the income details. What are the important deductions, what are the important incomes having the form will be discussed. And ITR 6 for companies, generally we have public companies, private companies and domestic, non-domestic, all these companies, different types of companies we have already studied under the graduation level. So that company, if they wanted to file the income tax return, definitely they have to use the ITR 6. Under ITR 6, the corporate taxation, generally we are calling as corporate taxation, company related all income sources, and also the sources which are exempted in different categories of the company's income should be taken into the ITR 6. And ITR 7, it is a practical, and there will be some practices which we are deducting some deductions, and we are taking some incomes that all relating to the company source of income, that will be taken into ITR 7. Let us go for due dates for filing of income tax returns. We understand different types of incomes, we understand what type of return will be filing for different situations. Let us see what is the due dates for filing of income tax return. In this, majorly we can categorize as 2 major things. One is income tax returns without any tax audit, and another one income tax returns with tax audit filing. So some of the, maybe is individual, maybe is HUF, maybe is the firm or company, sometimes he has to undergo for the tax audit which done by chartered accountants. They have a provision of doing the tax filing with auditor certification. The auditor has to certify all the income particulars and all the tax calculation particulars, then he has to certify on this particular income where one certain limit of income is exceeded by any other person, not only individual, HUF, any other person comes under the one particular slab. According to that particular financial year, it comes under tax audited income tax returns has to be filed. This is one category. And general category, there is no need of tax audit, chartered accountant certification is not required, then you can file as usually by the individuals, by the HUF, by the other persons. Generally, in the case of companies, definitely they have to go for auditing as per the Companies Act 2013. Individuals and HUF non-audit forms generally, so they will be filed income tax returns before 31st July. This is one major item. Every person, every year they are following before 31st July, they have to file the income tax returns. Somebody who are not touch with this profession, sometimes they are getting doubts. Last time I have filed my return, maybe in the month of August or September, sometimes they are telling, maybe they are remembering sometime. The reason is the income tax department will check the number of returns filed every year with that last date of filing return, that is 31st July. For example, most of the returns are filed, the income tax department will not extend the last date. But sometimes what the number of assessees are there, sometimes they are not able to submit due to technical problem, due to income problem, due to some other problem in the society. Sometimes if they are not able to filing, the income tax department will extend the last date from 31st July to sometimes 1 month or sometimes 2 months. It is depending on the situation. So that is the reason sometimes assessees are forgetting time for filing of income tax return, but particularly as per the law 31st July is the last day for filing of individuals and HUF. Let us see second situation, companies and audit cases. So these type of assessees can file income tax return before 31st October compared to individuals August, September, October, 3 months extra time for the companies who are undergoing the audit. Let us see next a revised return. You have filed a return, but you found after that some errors are there, some modification are required, you can go for revision of a return. So when you want to a revised return, it should be completed before 31st December. So this is another important date every person has to be understand. And not only that, sometimes belated return before 31st December, this may be 3 years, 1 year, 2 years if assessee is not available in India. Maybe sometimes you are well available, but you are making of income tax return sometimes not necessary. But some other purpose you are filing last 3 years returns, delayed returns. If you are filing with the different situations, it must be before 31st December. So this is all some important issues which comes to the filing of income tax returns. Then in this we have another important topic, assessment of income tax. We have different meanings for the assessment. Let us see first basic meaning, what it is given. Assessment means the computation of income, determination of the amount of tax payable, and sometimes laid down by in the act as it is mentioned according to that particular financial year, and which is relating to the income tax year 1961. We have to calculate, we have to make the procedure is under the meaning of assessment. Not only that, additionally assessment we have the calculation of tax, planning of tax, organization of tax, and you have to make the management of tax. Tax evasion also one of the important point under the assessment. So these are all activities, if you are doing properly, then your assessment will be closed. So assessment will have this type of important basic concepts. Let us see what type of assessments. Generally, when the assessee is submitted his income tax return, then the officials will see how this income tax return is properly submitted or not. They will scrutinize, they will check, they will verify. Finally, they will send you this particular information to the assessee is procedure of assessment. In this, we have certain types of assessments. The first type, self-assessment. Every individual, they have own liability to make their assessment, their calculation, their submission is mandatory. In Government of India, when they are making certain fundamental rights, fundamental duties, it is one of the duty of citizen. You have to file your income tax return, you have to check your income, that how much you are exceeding, whether it comes to income tax purview, then you have to make yourself for filing of income tax return. That is called self-assessment. Then you have to come to the summary assessment. Once you are submitting income tax return, the Department of Income Tax, they will make the overall calculation of income tax, whether it is correct or not. They will check overall position of income and what is the procedure and how you are following the dates and everything comes under summary assessment. And let us go for scrutiny assessment. Scrutiny assessment, they will check every aspect one to one every aspect of receipts and payments, income and expenditure, everything they will check it out, and they will take the appropriate reasons for making receipts and payment, everything under this particular scrutiny assessment. Let's come to the best judgment assessment. Generally, the people can understand best judgment assessment when the assessee is submitting sometimes maybe twice or thrice or sometimes more and more, where the assessing officer, income tax officer, is not satisfied. Then the income tax officer advised to assessee not to submit anymore. Whatever you submitted, they will pick up whichever is best. And sometimes according to the time, according to the law, they will verify the already submitted returns and they will choose one best return for making assessment. Not only that, we have reassessment under section 147. The reassessment is reopening of assessment. They will check one by one how you have submitted, and generally in the randomly, sometimes all small returns they will check randomly. Sometimes it is not much scrutiny or anything. So while making this random checking, sometimes important assessments are missing, important assessees are missing. Some assessees who are making fraud also sometimes missing. So for that purpose, if any information received by the income tax department, they will make a reassessment. A return of income assessment procedures, as we have already mentioned, these two are very important procedures for making all the calculation of heads of income, and also the individual assessees how they are calculated, we understood. But if you are not doing all this information properly, then sometimes how you are calculated, how you are making filing, these are all waste. That is the reason every individual need to understand what type of returns are important and how to submit returns is important, and what categories of income you have and what type of assessee is filing income tax return is more theoretical framework is important. Otherwise, the filing of income tax return sometimes deviated from one person to another person, one ITR to another ITR. So calculation of tax is not enough, understanding procedure is enough. So the appropriate returns are very, very important. So that is the reason we have all studied the number of returns, who is the appropriate assessees. Not only that, we have also discussed assessment. In this assessment, how to make the different aspects like tax planning, tax aviation, tax calculation, tax management. Not only that, the calculation of tax filing of income tax returns. And not only that, we have already understand what is self-assessment, what is reassessment, what is scrutiny assessment, what is best judgment assessment. These are all the minimum knowledge of assessee need to understand how best you can do the assessment of one particular year tax calculation. Thank you one and all.